Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be talking on how to trade without a daily bias. So I'll be going through simple steps in which you can use to trade without knowing the daily bias, if it's going to be an up close daily candle or a down close daily candle. No, we are going to be using lower time frames to determine a short-term trend without a daily bias. Before I start, make sure to like and subscribe to the YouTube channel. So we're talking on how to trade without a daily bias. If you want to trade without a daily bias, first you need to pick 2 time frames or 3. If you are planning on going more lower to maybe the 1 minute or the 30 seconds to see more price movements, you might pick 2 or 3, but the minimum 2 time frames or 3 time frames. So the first time frame, you'll be marking out your premium and discount array on the higher time frame. That is, in those 2 time frame or 3 time frame, the highest time frame, you'll be marking out your premium and discount array to know what price I've done. Because all we are trying to do, we are trying to build a framework. Because having a higher time frame narrative is more important than taking random trades. We are trying to build a narrative. So understanding the premium and discount array, knowing what have price done and what price might do, is a big advantage when trading without a bias. So now, going more lower, you need to wait for a high probability setups. You need to wait for a scenarios where price is looking more favorable and is tipping his hands to you to a direction or to a PDRE. So it's either price have taken out a PDRE and price is leading to another PDRE, because we are trying to trade from one reference point to another reference point, which are the PDREs. Then you wait for your entry on lower time frame, which you will be using the second time frame and the third time frame for entry. So now let's dive into a chart example. Let's do an example. We'll be doing 2 examples in this video to explain what I'm talking about. And in this example, I'll be using the 1 hour time frame as my higher time frame, the 5 minute time frame as my lower time frame, and the 1 minute if I'm to go more lower to look for more specific entry. So if you had to use 3 time frames, if you had to go down to the lowest time frame, like the 1 minute, it gives you an extra confirmation which you will understand more when I go through the examples. This is on the 1 hour time frame on Euro USD. So this is recent price action. Bring your attention down to the sell side liquidity. So this was before the London section. I'm talking about before the London section. So before the London section, the green area, you see, the green area is indicating the London section, and the red area is indicating the New York section. So I'll be using this logic based on this section. So if you're a London section trader, I will do an example on how to look for a bias, how to trade without a daily bias before the London section, to have a direction before the London section, and the same thing to the New York section, how to trade the New York section without a daily bias. On the London section, before the London section, let me say before this candles open, what have price done? Price traded lower, close to the sell side liquidity. Price haven't run out the sell side liquidity. The candle traded higher a little bit and closed, leaving an equal low liquidity. An equal low sell side liquidity. As soon as price opened, what the price did, price took out the sell side liquidity with the first hour on the London section, which is the 2 a.m. candle. The 2 a.m. candle traded lower, took out the sell side liquidity. After running out the sell side liquidity, if price were to trade higher, where's the next drawn liquidity? Looking at the Asian section, the Asian high, you can see how price moved back and forth on the 1 hour time frame. If you're to go to the 15-minute time frame, you will see that there's a whole lot of consolidation, and price only took out the sell side, which means they have buy side liquidity resting above the Asian section high. That will be your next draw on liquidity, where you'll be anticipating price to take out the buy side liquidity. Price took out the sell side liquidity. You can see a retracement taking out the buy side liquidity. So the narrative before the London section, which I had before price traded to the buy side liquidity. The narrative was that I was anticipating price that if price takes out the sell side liquidity, I would like to see price gravitate to take out the buy side liquidity, which is the Asian high, because there's a whole lot of consolidation and price haven't done a whole lot to run out the buy side liquidity before trading down to take out the sell side liquidity. Now, I'll move to the point where price took out the sell side liquidity on the 5 minutes. On the 5 minutes, you can see the opening of the London section, price took out the sell side liquidity. So I tried to buy in from that first fair value gap and I was stopped out. But what brought my attention back before I took this trade and this trade was the fact that price traded lower, went back to this low. Price went back to the sell side liquidity, did a shift of structure, leaving a fair value gap. This would have been your entry if you had to use 2 time frame. If you had to use 2 time frame, this would have been your entry. You'd be buying at this spot, anticipating price to go for the buy side liquidity, which is the red line you see above. Now, price open, went below, took out the sell side liquidity, traded higher with the first intention of going higher, enticing buyers. Price came back, took out the sell side liquidity again. I was stopped out at this swing low, but the fact that price created a new shift of structure, leaving a fair value gap, then I bought at the fair value gap. You can see how price respected the fair value gap with an impulsive move, leaving an order block. Retracing back to the other block, you can see the impulsive move to run on the buy side liquidity. Now you can take a screenshot and look at the day. This is the 15th of October. You can do a practice on this, or you can do a back testing on this to understand it more and have more detail. Now, if I were to use the 1 minute for an entry, I'll be zooming down to when price traded to this fair value gap, because now I'm sure that price have shifted structure from my second time frame. Now the third time frame will be used for an entry once price trade to a PDRA on the 5 minute, which means price traded higher. This fair value gap is a discount fair value gap leading to this inverse fair value gap. I didn't mark it, but those are discount fair value gap, and these are premium prices. If price were to trade higher, it's premium price, and price is at a discount from the 1 hour, the 5 minutes. So looking for an entry as soon as price trades to a 5 minute discount is an ideal entry to use the third time frame. On the third time frame, you can see how price traded to the fair value gap. Here's the fair value gap from the 5 minutes. You can see this candle. You can see the impulsive move from the candle. An impulsive move higher, leaving a fair value gap at the same level of this fair value gap. This is a high probability setup. A fair value gap inside a fair value gap is a high probability setup. You can take note of that. Price left the fair value gap, leaving a fair value gap. Retrace, fill in the fair value gap. After the fill of the fair value gap, you can see how price traded higher. The second entry, as soon as price traded to the second entry, which was the order block from the 5 minutes. Looking at the 1 minute, you can still identify this, the main order block. Here is the main order block. So price respecting this order block is the high probability setups. And there are many advantages of you getting in. You can see the retracement to this fair value gap, impulsive move. So many ways to take advantage of this. Here's the other block. Price traded to respected the other block. Many ways to take advantage from the 1 minute after confirming the shift of structure from the 5 minutes. The 5 minute did a shift of structure respecting this fair value gap. That would be when you are permitted to go to the third time frame to look for your entry. So you can use the 1 hour, the 5 minutes, and the 1 minute, which I used in this example, but you can still use it to any advantage. You can use it for scalping, swing trading, day trading. There's intraday trades. To take intraday trades, because if I'm to use it to scalp, I'll be focusing on the daily time frame, 4-hour time frame, and I can see the 15 minutes for an entry, but I can still take trades on the 4-hour or the 1 hour. That's if I were to use it for swing trading. Now let's do another example before the New York section. So these were the trades I took. First buy, second buy. Now on the New York section, before the New York section, remember we're trying to trade from one reference point to another. Price traded higher, took out the buy side liquidity, closed. So I trade the New York section from the 7 a.m. to the 10 a.m. But my main focus is from the 7 a.m. to the 8:30 before news. Because most times at 8:30 there are a lot of economical news. Before 7 a.m., price traded higher, took out the buy side liquidity, left a fair value gap. Here's the fair value gap. Price left the fair value gap. Price retraced into the fair value gap before the 7 a.m., but price stayed above the mid-range of the fair value gap. With a consequence encouragement level, price stayed above it. The next 7 a.m., I'm anticipating higher prices due to the fact that price took out a buy side, a premium buy side liquidity, which if I'm to anticipate more higher prices, I will anticipate price to trade to a discount area, to a discount reference point, which would be a discount fair value gap. Below, if I'm to use a fib from this swing low to swing high, you will see that this fair value gap is at the mid-range, which is close to a discount. Price traded to the fair value gap, which is the discount fair value gap, went below the 50% mid-range. It's a screenshot, so I can use a fib, but you can still do your own back testing and use a fib to measure it. 7 a.m. price traded lower got more deep into the fair value gap, go below the 50% into a discount. Now price is at a discount fair value gap and is at a discount, and I'm anticipating higher prices due to the fact that during the London section, price traded higher, took out the buy side liquidity, closed above, left the fair value gap, and price is inside the fair value gap and at a discount. Anticipating higher prices for price to run on the buy side liquidity that is running out the London high. That was my thought process. So you can see I used the first process to have the narrative. The narrative was for price to trade to the fair value gap, which price already traded to the fair value gap before the 7 a.m. As soon as price traded to the fair value gap, as soon as 7 a.m. opens, I'm anticipating higher prices to take out the buy side liquidity. That's the narrative. That is having a narrative. Now let's go to the 5 minutes. On a 5 minutes, you can see the price action. Price haven't done any shifts or structure. Price went outside the fair value gap. But the fact that I saw this 5 minute candle close inside the fair value gap, did not close outside the fair value gap. Then I saw an impulsive move. Seeing this impulsive move, a retracement to the fair value gap back to a discount. That was when I took my entry. Although I didn't enter straightly from the 5 minute, I used the 1 minute entry. And my target was the buy side liquidity. But you can see it more clearly. You can see how price did a shift of structure, retraced to the fair value gap, respected the fair value gap, traded higher. This would have been another advantage of you taking a trade. Traded higher. Till price took out the buy side liquidity. You can see after the run on the buy side liquidity, you can see the retracement around 10 a.m. Moving to the 1 minute. So I took out the section indicator so that you can see it more clearly. On the 1 minute, you can look at price. Price traded lower. After the shift of structure on the 5 minutes, price traded lower into a discount. Price traded into a discount, left a fair value gap. Price tried to create a high, did a little retracement, then did a shift of structure. You can see this position tools indicating where I took the buy. Taking the buy from the other block, holding the trade, managing the trade. The second entry, my stop loss was below the fair value gap because on the 5 minutes I can identify another fair value gap. So in a trade management, you have to look at the mid time frame, which is the 5 minutes and the 1 minute when managing your trade. My stop loss was at this low, price retraced to the fair value gap. So how price respected it and traded higher. The price takes out the buy side liquidity. So if you want to learn more about this strategy on how to trade without a daily bias, make sure to check the description below to join the FOREX Trading Empire community. There's a Telegram link in the description below. make sure to join the FOREX Trading Empire and chat up the admin to join the main group, the private group. So I think most people get confused that the first group is the private group. The first group is not a private group. It's a group where you get to know more about us, advantages that we have when you join the FOREX Trading Empire community. But you need to DM the admin to have access to the private group. So that's all for this video. Make sure to like and subscribe. See you guys in the next video.